Hello, my name is Trevor Grant, and this is a recording of the presentation held in the University Club in UCD on October 18, 2022. The topic of the presentation was protect yourself against rising interest rates, review your mortgage rate and ensure you are getting the best rate available to you. This short presentation should be of interest to you if you have a mortgage, if you want to protect yourself against increasing interest rates over the coming months, or if you know someone who does. So, which mortgage customers can protect themselves? Such customers are those on a variable rate, tracker rate, or those in a fixed rate agreement. So essentially, everybody with a mortgage. Why would you want to protect yourself and take action now? Firstly, you will have read and seen in the media that rates are increasing. This is for a number of reasons, including inflation, the war in Ukraine, and the lack of supply of goods and services. The ECB have already increased interest rates by 1.25%, and they are expected to announce an increase of 0.75% before the end of October 2022. Inflation and the rising cost of living is a big concern for all of us, and a mortgage is traditionally the single biggest monthly commitment anyone will have. Unfortunately, the era of cheap money is over, and we're now heading to a new normal for interest rates. So what does the new normal look like? ECB is now 1.25%, with, as I've said, another increase due in October, and most likely a further increase by year end, and 1, 2, if not 3 increases in 2023. If you're on a tracker rate, you'll be paying a margin over ECB. So what will your tracker rate be in 2023? The era of very cheap money and low interest rates was stimulated by the arrival of avant money into the mortgage market in 2020, with the offering of a fixed rate for 3, 5, or 7 years of 1.95% for loans to value of less than 60%. This was a market-leading rate at the time, and a number of lenders in competition reduced their fixed rates accordingly to compete with avant money. However, now, 2 years on, 2 lenders have actually increased their rates quite significantly, and you're now looking at fixed rates for 3 or 5 years with 2 lenders at 3.75% or 5.95%. Other lenders are expected to follow with interest increases over the next weeks and months. However, we would hope not to see rates increase across the board to 5.95% for 5 years with any lender. We are perhaps heading to where we were in 2017, when 3-year fixed rates range from between 3.65 and 3.85%, and 5-year fixed rates range from between 3.7% and 3.9%. Ultimately, however, nobody knows by how much interest rates will increase, although the ECB needs to be careful that if it increases rates too much, they will only prolong a recession which a number of European countries are likely to enter into next year. So what can you do to protect yourself? You should contact your existing lender, confirm your existing rate and terms, and see what options are available to you with your bank. Your own lender may offer you the best terms available to you, but they're not obliged to tell you that better terms exist elsewhere. So before securing new terms with your existing lender, you should compare them to the market by engaging a market-based advisor, such as Affinity Advisors, to tell you how that offer compares with the rest of the market. There are still and will be very good deals for customers to switch mortgage to a new provider and for customers to stay with their existing lender. So market-based advice is extremely important. Another point to note is that whilst traditionally a bank can charge a penalty if a customer breaks their fixed rate agreement, at the moment, due to the rise in the cost of funds, there are very few penalties being charged by existing lenders to break a fixed rate agreement and refix with them, or indeed to move to another lender. So when confirming your terms, be sure to ask your lender to confirm whether or not there's a fixed rate break fee applicable to you. There are 10 mortgage providers offering over 170 mortgage products in the Irish mortgage market. So therefore, market-based advice helping you understand all of your options with such a significant financial commitment is essential. Affinity Advisors have been providing advice to UCD personnel and customers nationwide for the last 5 years. We were voted Mortgage Broker of the Year in 2018 and 19, and we offer market-based advice with significant knowledge. And our service is a free advisory service from qualified personnel to all members of the UCD staff. Other considerations to take on board at this time. It's always important to ensure that your mortgage protection policy is priced correctly. You may have obtained your mortgage protection directly from your bank, and this means it may not have been priced against available market options, and discounts available in the market may not have been applied. You should apply the same logic to your standalone life cover and serious illness policies, and you should also look at your income protection cover. UCD personnel are fortunate in that they can opt into a group protection scheme through salary deduction. However, this does not extend to family or partners, and therefore it's extremely important that everyone in the household who contributes to the mortgage is covered. Finally, you need to ensure that your home is adequately insured. The central bank recently released a survey outlining the fact that many homes were underinsured against fire or other damage based on the fact that the cost of materials have increased significantly over the last number of months. Thank you for listening to our presentation. If you have any questions, please email me, Trevor Grant, at trevor@affinityadv.ie, or contact me on either of the other phone numbers. As I've said during this presentation, Affinity Advisors offer free mortgage and protection advisory services to all UCD employees. Thank you for listening. Have a good day.